If you are in the market to buy a house or you're thinking maybe to enter the market in 2024, stay tuned because I'm going to dissect seller concessions by way of a rate buy down and share some golden nuggets with you at the end that might make you say, So what we're going to set the stage for is imagine you're buying a $600,000 house, 5% down. Rates hovering 7.5%, let's say. So what's going on if the market is cooling in other areas where prices are possibly not going down? This is something for you to think about. If there's still a lot of competition and bidding over the price of the home, is this going to be applicable to you? Possibly, because I could teach you a strategy on how to get concessions even in a hot market. Hey everyone, welcome back to the channel. Ray from the Mortgage Master Group. Challenging for affordability, right? I definitely can understand that for you. So you get a contract, you get seller concessions. In this example, we're going to use the example of approximately $14,000 of seller concessions. The reason for that is because one of the hot buzzwords has become 2-1 buy down. So first, what the hell is a 2-1 buy down? If you're not sure, let's dive into that. It is a strategy that temporarily reduces the rate. So if you closed at a rate at 7.5%, the 2-1 buy down would start with your payment for the first 12 months at 5.5%. That is approximately $750 a month cheaper. Okay, $9,000 in that first year in savings. Second year, cut it in half. About $380 a month or $4,600. So now you see where I got to that $14,000 concession. So if the seller concessions were to allow you to do that, you would think, well, that's a no-brainer. I want the temporary relief on the payment. But there is an alternative, and I'm going to share that with you in a minute. So why would a temporary buy down be beneficial for you? Well, if you know that your income is going to increase, if you feel that there's going to be additional income and expenses are going to be reduced after closing, or you feel very strongly that interest rates are going to go down in the next 24 months, that you can refinance. These will be things that could be a reason to do a temporary buy down and use the seller concessions for that buy down. But as I mentioned, there might be something different to think about. So go back to the top. You have about $14,000 in concessions. That rate, 7.5%. If you took that same money and permanently for the term of that loan bought down the interest rate, you might be running a 6.8% rate permanently. So that is somewhere around $300 a month, give or take, less than if you got no concessions on the property. Why might this be a better choice? The alternative solution to a temporary buy down is the permanent buy down. But you might say, Ray, that's still not $750 a month. No, and you are correct. However, talk to your friends who might have closed on a 2-1 buy down last fall. None of them have refinanced because rates are higher. All of them are going to see their payments go up. So now they have 12 more months of that temporary buy down before they end up at that higher note rate, which in this example is 7.5%. Permanent buy down, close in rate to that temporary in year 2. So stay with me, because if I did the permanent buy down, I refer that as an equity protector. In a temporary buy down example, you're going to refinance. So who wins out of that example? The lender. Now, if you do the permanent buy down, if you were at 6.8 and rates went to 6.75 or 6.5, you don't need to refinance. Whereas with that temporary buy down, you're going to have closing costs and likely wrap those on top of your payoff, chewing into your equity in month 12, 13, 24, whatever. Permanent buy down does provide stability. Again, it's not a matter of is the 2-1 better than the permanent. It's a matter of getting educated and knowing that there are options for you out there. This is a time where rates have been higher. There were projections when rates are going to come down, and talking heads like to talk about that. Everyone's been wrong so far. So if you find this information valuable, definitely like it. If you know people that are looking to buy, that are talking about buy downs, 2-1 buy down, share this with them. And if you find this information helpful in your home buying journey to build verticals of wealth, I surely hope that you'll subscribe for more content like this in the future. Be well.